What's up, everybody? Welcome to the fifth episode of the Investing Penguin. Covered calls and cash secured puts. A quick shout out to my first public subscriber, someone named TD9175SR. So thank you, TD9175SR, wherever you are. And for everyone else, please subscribe and share this channel with your investment friends. I hope this channel will help you with your investing. For those of you who don't know me, I am the Penguin, and in this video, I want to share with you my success with AT&T stock using covered calls and cash secured puts. Between June 1st of 2020 and May 17th of 2021, I profited $2,591.42 and made a 17.4% annualized return on AT&T stock using covered calls and cash secured puts. Right after I bought AT&T in June of 2020, the stock started trading sideways and trading lower. Sideways is okay, lower is not good. I had to kick and scratch and claw my way back to profitability with AT&T. I wrote 9 covered calls and collected 4 dividend payments to finally make a respectable return. The covered calls and dividends helped me weather the downside of AT&T, and I was able to stay in the game and catch the upside rewards when AT&T finally turned positive for me in May of 2021. And just when I thought AT&T was on the rise again, AT&T announced the Warner Media Discovery deal and the dreaded dividend cut. The stock took a 10% hit, but that's why I use covered calls and cash secured puts to help soften the blow when your stock takes a hit. So in this video, I'm going to break down the numbers to show you how I was still profitable even though AT&T was trading sideways and trading lower. So let's dive into this. I had been researching AT&T stock. I actually liked both AT&T and Verizon, and I fell in love with the juicy AT&T dividend yield. Hindsight is 2020, but wow, AT&T snared me in their dividend trap. So I decided to sell a cash secured put, and I had the potential to buy 500 shares of AT&T at $31 a share. On June 1st, I sold 5 cash secured put contracts for 60 cents for the June 12th expiration and the $31 strike price. The 60 cents was a good price for AT&T options, and I collected a premium of $296.65. If AT&T closes below $31 a share on June 12th, I was buying those shares at a discount, which was fine since I was interested in owning AT&T anyways. And sure enough, on Friday, June 12th, AT&T closed below $31 a share. So the following Monday, the shares were assigned to me, and I bought 500 shares of AT&T at $31. I bought these shares at a discount using cash secured puts. Now it's time to start writing covered calls. Between June 15th of 2020 and May 17th of 2021, I executed 9 covered call contracts generating over $1,000 in profits. I also collected 4 dividend payments generating $1,040 in profits. On Friday, May 14th of 2021, AT&T stock closed above $31.50 a share. So the following Monday, my 500 shares of AT&T were sold at $31.50 a share. I made a profit of $2,591.42 for 350 days, which is a 17.4% annualized return. And that's not a bad return. It's still better than the S&P 500 yearly average. But what is amazing is that the 17.4% was generated while AT&T stock was trading sideways and trading lower. Here is a snapshot of those trades, just so you know this is legit. Here is a graph of AT&T stock between June of 2020 and May of 2021. Right after I bought AT&T, the stock started trading sideways and trading lower, but I didn't panic. As AT&T started trading lower in October and November, my covered call premiums got smaller and smaller. And I've said this before, lots of littles can add up to big numbers. And John in the CPT dashboard channel, he likes to say crumbs. And that totally applies to my situation. I was picking up crumbs as AT&T stock was trading lower. But I didn't panic. I wrote 9 covered calls and collected 4 dividend payments, clawing my way back to profitability. In the end, I still earned a respectable 17.4% annualized return, which is better than the S&P 500 yearly average. So I say, thank goodness for covered calls. The covered calls and dividends helped me weather the downside of AT&T, and I was able to stay in the game and catch the upside rewards when AT&T finally turned positive for me in May of 2021. So what if I would have just bought and held AT&T using the buy and hold strategy only? What if I knew nothing about covered calls and cash secured puts? Well, first, that would be a shame since we, retail investors, should all know how to use covered calls and cash secured puts. Second, my return would have been mediocre. Sure, I would have had some stock appreciation and collected the dividend payments to earn a 8.67% annualized return, but that barely pays the bills. So lesson learned, covered calls and cash secured puts can help you make good returns, even when a stock is trading sideways and trading lower. They can also help average returns turn into great returns. If you are going to own the stock long term, you might as well collect some premium along the way. Covered calls is like an extra dividend payment. Here's a quick stare and compare using the buy and hold strategy versus the covered call strategy. And as you can see, the returns are better using the covered call strategy. So right after I sold AT&T at $31.50, I decided to buy AT&T again to write more covered calls. Rinse and repeat, baby. In my mind, AT&T was trending upwards. The stock dipped below $31.50 again, and the dividend yield was still good. So on May 17th, I bought 1,300 shares of AT&T at $31.38 a share. Then on that same day, I sold 13 covered call contracts for 47 cents for the May 28th expiration and the $31.50 strike price. I collected a premium of $602.34. Well, on Friday, May 28th, AT&T closed below $31.50 a share. The option expired worthless, so I got to keep all the shares and the opportunity to write another covered call. I made a profit of $602.34 for 11 days. But during those 11 days, and right after I bought my 1,300 shares of AT&T, that's when AT&T announced the Warner Media Discovery deal and the dreaded dividend cut. Are you serious? I said to myself. The stock immediately took a 10% haircut. So just like in 2020, I'm going to keep writing covered calls to claw my way back to profitability. And that's why I use covered calls and cash secured puts to help soften the blow when your stock takes a hit on bad news. It's amazing how the news today can move the price of a stock. Not the numbers, but the news. I like covered calls and cash secured puts because they give me an advantage in these type of situations. Well, everyone, I hope you enjoyed this review of AT&T stock over the last year using covered calls and cash secured puts. This is my 5th video, and there will be more videos coming each week. If you have any covered call stories to share, please drop them in the comments section below. I would love to hear them. In the meantime, blow up that like button, blast that subscribe button, and share this video with your friends. Thank you for watching. Here's an interesting fact. Alexander Graham Bell is often credited with being the inventor of the telephone since he was awarded the first successful patent. However, there were many other inventors such as Elijah Gray and Antonio Meucci who also developed a talking telegraph. Some researchers even suggest that Elijah Gray applied on the same day that Bell applied for his patent of the telephone, but Bell's lawyer got to the patent office first. The date was February 14, 1876. Bell's lawyer was the fifth entry of that day, while Gray's lawyer was the 39th. Therefore, the U.S. Patent Office awarded Bell with the first patent for a telephone, U.S. patent number 174465. Money music. Aren't we all tired of working from 9 to 5? Is there more to life than just working? Well, Dolly Parton wrote this song for the 1980s movie 9 to 5. It was reported that between movie takes, Dolly would walk around the set playing her acrylic nails like a washboard, writing this song for the movie. The song 9 to 5 also boasts a more meaningful legacy for working women today. Dolly's song and the film 9 to 5 are both inspired by the women's activist organization appropriately named 9 to 5. Disclaimer: I am not a financial advisor. This video is for entertainment and educational purposes only. I am only sharing my experiences and opinions. Investing involves risk, so please seek advice and educate yourself.